We're back here. It's the Business Side show here on Dublin South FM. This show is sponsored by Dunleary Rathdown Local Enterprise Office. And we've reached that time of the month where we have our financial expert, Breffni May, back in the studio. Breffni, welcome.
Happy New Year to you, sir.
Happy New Year to you. And as I say, we live in interesting times now, and I mean interesting in the Chinese sense. But let's start domestically first. We've got a lot of issues, as we always do every month, to cover.
Where do you want to start?
That Irish obsession called property. Why not start there? I can't think of a better place to start. That's where all the newspapers have their headlines anyway.
Absolutely. That's been the obsession. And, it hasn't changed. And I often wonder why people are still so obsessed with it. We've just been through 7 years of absolute shocking pain, built around property and our need to own a piece of land and a bit of land somewhere. Mm-hmm. I mean, that's been an obsession for years. And I just wonder why people want to continue to invest in it. I mean, it is a very big, expensive commodity when you take it on. There are lots of charges and costs go with it. And I wonder why people invest, purely and simply because you put so much capital into one particular entity and one particular item. If it wasn't called property and called a teapot, and you could sell it quickly, like you can sell a teapot, then I don't think people would be so fascinated about property. Because property is, if you're investing in it, it hasn't changed. I'm 40 years in the financial services business and 30 years running my own business. The only reason people get into property is for two reasons. Either you grow the value of the property or you grow the rental income. And if you're growing the value of the property, then you have a target in mind. You buy it with a purpose. When it gets up to a certain price, if you make 20% gain, you sell it and move on. If you're growing for rental purposes, that's long term. And that could be 10 to 15 to 20 years. And I was listening as I was coming in to your previous contributor talking about Germany being a flat and mature market and lots of things happening in that market. Well, there's lots of things happening here as well. I mean, the two drivers we had that originally drove the property market was cheap money, we have it again, but a young, well-educated workforce that were staying here and they were finding jobs. Well, they all left and they're still going by the thousands every year. So the real driver's gone out of the market. And I just wonder why people are investing in it. Mm-hmm. Borrowing is a big problem. NAMA or the NTMA central bank haven't decided what they want to do about the 20% deposit rates. They took up their information. They got the information. They're preparing a report at the moment to come back to tell us whether they will actually stick to their guns looking for a 20% deposit for first-time buyers. And the one thing you always have to be careful in this country is we have an election coming. Politicians are not going to be too happy if they have to turn around and make people swallow, on top of everything else they've had to swallow, the fact that you have to now save a hell of a lot more money just to buy a house to live in this country. So there's a battle going to be going on there. And central bank are not going to jump up and down making a decision tomorrow morning. And that is hanging over the market. You also have NAMA. NAMA is the biggest landlord in the country. And I was reading one of their reports yesterday preparing for this show. They actually have a great website. They have, I think it's 5,700 properties in the Dublin area that they could release and they need to get rid of.
They're sitting on.
So is it a market? Are they the controllers of it? What?
Is it a manipulated market?
Well, it is, yeah. I mean, it's not real. If you look at the numbers of people who borrowed money last year to buy property, they're infinitesimal. That would have been that total volume of loans that were taken down last year would have been done in 1 month, and in the good times when property was at its height. So we're talking a very, very thin market. We're talking very thin numbers, and a lot of the property that's out there is distressed, and people don't want to particularly have to sell unless they absolutely have a gun to their head to sell. So I'm just wondering, why are people so fascinated with it at the moment? Because there's a lot of uncertainty around it. And you have to ask yourself the question, if I buy into this stuff and it's for my pension and I'm 50 years of age, well, my question is, are you going to have to hang on to it till you're 70? What do you want it to do for you? It's what is this asset going to do for you at the end of the day? And you have to look at it in terms of that. What do I want this bloody thing to do for me? Am I going to get a property gain, capital gain out of it, or a rental income out of it? What do I want it to do? And then base your decision on that. But if you're buying a home, that's a completely different decision. That's a decision, where do we want to live and can we afford to make the payments? Mm-hmm. That's a very, very different decision. And that's up in the air at the moment. And the central bank control that. But NAM are sitting at the back there with this wad of property sitting there, ready to offload. And they're only going to offload it into the market when they can get good value for themselves. Because their brief is completely different to central banks.
To make money.
Theirs to make money for you and me. They've got to get the losses that were money that was poured into the banks. They have to get that capital back. And they're only going to put it back into a market that's going to actually give them a return. And they're going to sell it to somebody that can actually... And they don't care whether they sell it to you or me or sell it to a fund in the US or in the UK. They don't care. As long as they get return for you and me at the end of the day. Their brief is completely different to the central bank. But they are the biggest single landlord. And they are accumulating property every day. When a bank repossesses a property, it doesn't matter what it is, whether it's a hotel or a building or a factory or a home or a flat or an apartment or rental property, it ends up in NAM's clutches. They control when it goes out on the market. And AIB and Bank of Ireland are assiduously sitting there, working away every day of the week, accumulating all this property. And NAM will be the one who decides what they sell it for and when it goes. And they really do control the market. Looking at the central bank, they're the ones who control the money supply. They always have. They're back in the same position they were in. I'm a long time in business. They're back in the same driving seat they were in the 60s and 70s. Once upon a time, a lot of people have forgotten about this, they actually controlled how many car loans people got. So they controlled the import of cars coming into the country by actually controlling the the money supply for buying cars. People have forgotten that. That's their role, is to protect the economy. Primarily, protect the banking system. So, what they do on property, I haven't got a clue, to be honest with you. But if you're going to invest in property, and it is cheap, are you investing for 1 year, 5 years, 10 years or 15 years? Are you investing for retirement income? That decision, we're back to where we were making those decisions back in the 80s and 90s.
Now, you highlighted something there. A person has to establish first why they want to buy the property. Now, we've got an interesting situation in Ireland here where people... it was a conundrum between a house and an investment. We have what are called the accidental landlords. Yeah. People who maybe bought homes at the peak of this. Unfortunate situation for them. And then they possibly had to rent it out because they couldn't afford the mortgage repayments. And now they're stuck with a property. Maybe they might have come off a tracker mortgage. Yeah. And they're paying which are quite high rental tax costs here compared to other countries. Ireland is quite high.
Oh, absolutely, yeah.
So... they're stuck in this conundrum, yeah?
Yep.
Could they be, a lot of those people, I would say, would they be looking to offload now soon?
Any of my clients who are in a position where they have rental properties, and I'm looking at the ancillary costs that are going with it. You know, you've got to add up all the taxes, the registration fees and so on, and the cost of running a property. You've got to load all that up again, plus the cost of debt, of servicing the loans that are on, because they weren't bought for cash. It's only now the phenomenon is people are actually able to buy for cash. And you've got to decide, are you going to hang on to this thing? Is it a good thing or a bad thing? Can I afford it? Am I running out of equity? And the one thing I would say to people is, if you've got a rental property, and by the way, the central bank are now calling them hobby investors.
Oh, that's a new term, is it?
Yes.
Sorry.
They don't see you as a professional. You might own 2 or 3. A professional investor, they own an office block. Yeah. They know how to handle it, and they see us as hobby investors. And if you're a hobby investor, they really don't want you in the market. Yeah. It's not for you. They don't want to see you there. They want to see homes are for people living in, and residential investments are for banks and building societies to invest in, and for insurance companies and pension funds and so on. So I question this whole thing about why are people fascinated with this whole question of buying property. And the question is, have we not learned our lesson? We got burnt. You know, it's only worth what I think it's worth. And it can go down just as quick as it came up last year.
Old Moore's Almanac, just to highlight, it was in the media last week that Old Moore's Almanac, a publication that comes out every year, predicts a crash, and it specified July 2015, so don't be planning any holidays. And a crash in Dublin specifically. And who knows, maybe there might be a little bit of a mini drop. Maybe something will have to be released on the market.
Could you imagine if NAM released the homes that they've got, all the residential units that they've got, and let them flow on the market from May? What would that do to house prices?
They would drop
like a brick.
Especially with all the cash. The cash investors are nearly gone now. Yes. The cash is used up, maybe.
Yep.
And there isn't value there. So we'd be if they release those properties, they'd drop as just as much as they climbed in that period, I would say.
So you really have to think about why you're going to invest in property, because it is and always was a long-term investment. But you have to do it purposefully, part of a coordinated plan. If you've got the asset and got the impact capacity to buy property as a long-term investment producing rental income, it's a good investment as long as it's got the ratio, the gearing right. Your borrowing has to be at the right level to make it work.
Now, we'll just throw the spotlight abroad now, because a lot of people during the boom period maybe invested in Spain and other places. They're talking about Spain producing a little bit of a rebound. What's your view as regards Europe at the moment?
Spain has 40% unemployment on the under 30-year-olds.
Okay.
That's at revolutionary levels.
Domestically not strong, so?
Absolutely. That's two different markets.
So is it just speculators coming back in and saying now is a good time to pick up a bargain, yeah?
Well, there are bargains out there. There are bargains to be had. We all know people who've bought properties in Spain and they couldn't give them away with Green Shield stamps. You know, there's nobody out there to buy them. You couldn't get them. You couldn't walk away from them. They bought them for a couple of $100,000 and they're now worth 10 to 20, 30,000. Yeah, fine. Take your pick. Which ones do you want? But again, same question comes down to what are you doing it for? If it's home in the sun, happy days. Brilliant idea. Great, but be careful. And there are two different markets. There's the holiday stuff that's on the coast, you know, the Costa holiday stuff, and then there's the oldie worldy property up in the hills. They're two different markets. They're two very, very different markets. But you still have to be like, why are you buying it? Is it for home in the sun? Happy days if you could do it. Best time to do it. It's a good investment. But you're putting that money in there, and you're not going to get a return out of it because there is no market there. Spanish don't want the stuff, and the Europeans haven't got enough money to go borrowing. They're too busy looking over their shoulder to see if they've got a job next week. And Germany's hitting some bumpy water at the moment, and they may be heading into recession. France is almost on the verge of it, and Britain are talking about walking away from the European Union. Hello.
Put it under the mattress.
Yeah, there's a lot. You know, there's a lot happening out there.
What about shares then? Listen, we saw yesterday was the worst day in American markets. 1.8% drop.
Yes.
In the SP 100.
Yeah.
What's going on at the moment? Or do we have to stay away from that as well?
No, all the indexes are taking a hammering at the moment because of the involvement, because of the value of the oil companies. They're all part of the indexes, right? And both across the world, and the mining companies. And, you know, with oil prices hitting the floor, their revenues are being creamed. Mining has been hit because of the demand that's not happening from China. They were the biggest consumers of raw materials across the planet, and they still are. But the level is dropping because their economy is beginning to slow down. The numbers are actually telling people that this is what's happening. So that's having an impact on the stock market. The stock market, you've got to decide. If somebody wants to go into the stock market and buy individual stocks and shares, you know, they are playing in the minefield. And, you know, risk and potential loss are kindred brothers. They're one side of the same coin, right? And they sit comfortably beside each other. And if you're going to go in and buy stocks and shares, then, you know, we had a rough run at the end of last year. I mean, if anybody takes a look and see what happened to the stock market indexes, and just look at the indexes from October. A lovely rise all the way through July and August, dangerous time, and then bang on the button, middle of October, property market hit, the stock market hit the crown and tanked, and crawled back out of a hole again, and it's hit the market, hit a rough ride again. When you're investing in stocks and shares, 90% of people who invest in stocks and shares in this country are investing through pension funds or investments, like Irish Life or whatever, you know, and Davies and so on. They have their own mutual funds that are available to open. But the one thing you have to remember is you cannot any longer take it for granted you can put money into a pension fund or money into investment and leave it there and let it sit. You have to mind it, just like you mind your bank account, because that money isn't there's a lot of fluidity going on. The world is a very, very small place, a lot smaller than it was 30 or 40 years ago. It is what happens today, you know, blow your nose in Europe today, they hear about it in San Francisco within 10 seconds, not next week. So what happens around the world impacts on you and impacts on your pensions. Yes, there are opportunities there, but again, you've got to get a balance into your portfolios. And you have to, if you're looking at investing in stocks and shares, you have to look at indexes as being a reasonable alternative. And go back to the same thing of always beat the drum about yours. get independent advice and be prepared to pay for it. Because if you're not, somebody else is, and it mightn't be as independent as you'd like.
No, you hit on oil there, and oil is hit $52. It's lowest in 4 years. $52 in the Brent oil market. So, I mean, we talked in our last programme there about this is affecting Russia, resource economy. But also, I mean, the knock-on effect is it's going to affect America as well because of their high-value exploration techniques like fracking, which they say they need to be, the oil price has to be at a high value of $100 minimum to support that. So
yeah, that's happening at the moment. But you also have to remember is that if there is a slowdown in demand, and America is using fracking, has developed it as a resource, and they are generating a vast supply of oil, they are importing less. So demand worldwide is dropping. China is not consuming the volumes it was before. Put those two together, oil, just like everything else, has a value. It's only worth what somebody else is prepared to pay for it. So it's fallen. And, you know, the Saudis could have come in, let's call them OPEC. OPEC could have come in the last meeting in December and said, no, we'll push the price up. But they decided, no, let's see whether it falls. Now, was that their doing? Were they influenced by other things?
Are they flexing their muscles? Maybe? No?
Or they've lost control?
Okay.
And does it suit America? Does it suit the world? Does it suit Europe? Because who took it in the neck? I mean, the Russians. I mean, the land grabs that they've been going on with last year, this impacts, it hurts. And the last time that the West destroyed the USSR, they went aft pocket and destroyed their economy. And that was the end of the Europe and the end of the USSR. Is this the end of Mr. Putin? Or putting manners on them? One or the other, I don't know. But oil prices, you can see it in the pumps. I buy diesel, I buy 60 litres of diesel, 60 euros worth of diesel a week, and I put 60 euros into the car yesterday, and quite frankly, the range was up by 40 kilometres this week of extra range on that. I mean, it's an amazing change. Will it stay there? I don't know. But it is impacting on your pension, and it is impacting on mine. Because we have, as part of our pension funds, we've got shares in oil companies and mining companies and property companies. So all this stuff is very fluid. And again, it goes back to the old story, get a balance in your portfolio. Have a talk to somebody, get independent advice, and be prepared to pay for it.
Now, we'll just move quickly on to the euro. Everything is at record lows here. Euro is at a 9-year low.
Yeah.
It hit, I think, $1.19 yesterday. So the big thing here is the potential Greek exit. It's called the Grek exit. It's a term that's been bandied about. I think Citigroup came up with it. There's a lot of brinkmanship going on here. There's
an election coming up in Greece.
Yeah.
Just as an election coming up in Ireland.
Yeah.
Right? And people are playing politics. They don't want a left-wing government in. Europe doesn't. Germany doesn't want a left-wing government in. Germany cannot afford to see Greek exit. Well, the German banks can't afford to see the Greeks exit. If the Greeks exit, they can kiss their investment in Greece goodbye. It'll be gone. It'll be gone the way of the dodo. There are huge risks involved here.
I think it's called Lehman Squared if they leave by the financial markets.
I mean, they will huff and puff all day long, and they huffed and puffed the last time. And what did they do? Nothing. Did they push the Greeks out? Not a chance. Because if they push them out, who's next?
Well, Portugal, Spain.
By the way, who says Germany has the right to push them out? I mean, there's 27 members here. Okay? I mean, if you can give Greece the heavy-ho, why can't you give Germany the heavy-ho? So, I mean, it's all to play for here. This is politics. This is a lot of politics going on here. Yes, the Greeks, they have had an horrendous time. I mean, we are very fortunate that where we live, in Ireland, between Europe and America, every American wants to be Irish. Doesn't matter what colour they come. They all want to be Irish. And they love investing in Ireland. They enjoy. When they invest in Europe and they want to come to invest in Europe, where do they end up? They end up in Ireland. We're damn good at getting money out of them. And they invest here. And that has been one of the saving graces. The American economy is back up on its feet and running at the moment. How long it stays that way, I have no idea. But hopefully another year or 2, 3, 4, 5, 10, please. But that's benefited us. It doesn't have what we've got. They don't have a manufacturing economy. They live on agriculture and tourism. That's their economy, not much else. And they have got it in the neck, something awful. And it is politics.
Quickly, we've got 2 minutes left, but AIB? What 2015? It's not even listed on the Isaac at the moment. Is it going to be broken up and sold off?
As Mr. Noonan said in his broad Limerick accent, he says, we will sell it when we can get a good value for it.
So it's going to go?
It's going to go. When it suits the government. And remember, there is an election.
Yeah.
And when elections influence people, he'd love to have a nice big wad of money sitting in his bank account for the next budget. So watch this space. Will he let it go? I don't know. But NTMA and NAMA, the National Treasury Management Agency, they are the ones who are really advising him. Their brief at the end of the day, if they're anybody's going to sell it, they are, is to get as much money for us at the end of the day, the taxpayer, and recoup the losses, not get a quick election fund. That's not what it's about. I would be very disappointed if they turned around and did that and went for a quick election fund and sold it for buttons.
Yeah. So listen, Breffni, it's been hugely informative as always. And we'll have you back again next month.
Looking forward to it.
Yeah. So that's it for this week's show.